After a steep correction in Sona BLW stock on concerns over management continuity after Blackstone's exit, CLSA issues a buy rating on the stock, saying the business thesis remains intact. The brokerage, however, has cut its target price to 529 rupees per share. Bharti Airtel completes entry-level tariff hikes in all 22 circles, rolls out a higher recharge plan of 155 rupees in the 3 remaining circles. Stock is higher by around 1%. Krishna Diagnostics surges after it operationalizes 100 more pathology centers as a part of the contract with BMC. The total contract is for about 600 centers. And it's a muted listing for automotive component manufacturer Divgi Torque Systems. The stock debuts at 600 rupees per share at a slight premium to its issue price of 590 rupees per share. The stock has moved lower since. Hello and welcome to Chartbusters. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing some more trepidation for the markets. We did start out with more of a consolidatory phase, but it seems as though there is now a move towards a move which is taking place or towards the lower end of the trading session. So we have the Nifty, which is currently at around 17,084. It's down around 70 odd points, down 0.4%. We have the mid-cap index, which is really underperforming at this point in time. So down close to around 300 odd points for the mid-cap index. The Bank Nifty too has lost some amount of ground, down around 0.7% currently for the Bank Nifty. A lot of stocks within the Nifty space currently which are under pressure are the Adani stocks, a couple of the financials such as Bajaj Finserv, which is down around 1.7%. Tech M, after a strong run, is seeing some amount of profit booking, so that stock is down around 2.5 odd percent. But just watch out for a couple of the heavyweight stocks such as State Bank of India, for example, from the Bank Nifty, which is down around 1.6% today. But on a week-to-date basis, it's already lost close to around 5% of its market capitalization and around 15% on a year-to-date basis. Similar case with something like an Axis Bank as well as Kotak Mahindra Bank, both the stocks which are currently under pressure from the private banking space. So that's basically the picture which is playing out in the markets. Global volatility seems to be weighing down. The US CPI data would be something which would be top of mind, which will be out later on in the US markets this evening. Well, time to talk about the technicals. We have Shilpa Raut, who's joining in for a technical call on the market. Shilpa, hi, welcome to the show. Well, it seems as though we are now just playing to support 17,000 on the Nifty at this point in time. What is your thesis and how would you approach the markets?
Good morning, Ekta. Looking at Nifty, we see that, the PCR on option chain, it is now moving towards the oversold zones, but still, there's no respite in option chain. We see that 17,000, though it looks like it might hold, but, the downside trajectory is now opens towards 16,600 as well. Likewise, Bank Nifty, yesterday we broke the budget day lows and today we are sliding down. The downside definitely opens up towards 37,500 until and unless we decisively move past 40,500 again. Till then, it is a sell on rise and the texture remains very weak.
How would you approach individual banking counters now?
Actually, we had given yesterday, sell call on SBI, the one that you spoke about right now. From 540 odd zones, the target was for 520 to 500. One can still do that. We can look for targets till 480 as well, because the slide in Bank Nifty looks like there's a fresh selling momentum that is now rising. So in this fall, we will see SBI moving towards 480 zones.
Okay, you expect SBI to probably move lower towards 480 zones. What are the other stocks that you're tracking this morning, Shilpa?
I have one buy and one sell. The sell would be on Manappuram. Manappuram, it has just started trading below its very crucial support zones of 110 previously. So below 110, the sustenance will lead the stock moving towards 103 to even 100 and odd zones. So Manappuram is a sell with a stop loss of 111 for targets of 103 and 100. The other one would be a buy in GAIL. GAIL likewise has given sustaining above 110 zones. It is a very crucial support. So with a tight stop loss of 108 from here, one should look for targets of 114 to 118.
Okay, all right, Shilpa, we're going to let you go on that note. Thanks very much for joining in and taking us through your technical call on what is probably turning out to be another volatile session for the markets. Let's move on, but onto an important story. Sources are telling CNBC-TV18 that the Income Tax Department survey at CIPLA is focused on tax avoidance and violations, and that the department is investigating wrongful claims under multiple sections of the IT Act. Timsi Jaipuria is joining in with more details on this exclusive. Timsi.
Well, that's right. What sources have told CNBC TV18 is that the Income Tax Department, which took survey operations at CIPLA on 31st January, have focused on violations and tax avoidance. However, we are given to understand that no tax demand has been raised so far by the IT department, but preliminary investigations are looking for wrongful claims and deductions. Here, under Section 80IA, investigations allege that CIPLA has made wrongful claims of about 400 crores under this particular section. For the benefit of our viewers, Section 80IA provides for deduction of 100% of profits and gains derived from specific businesses for 10 consecutive years in a block of 15 years, only up to a certain period. Not just this, IT department alleges 1,300 crore of wrongful deduction claimed for R&D. Section 35 of IT Act actually provides for deduction on expenditure incurred for scientific R&D, ranging from 100 or 150% on case-specific basis. Taxman also alleges tax avoidance on funds given as benefits to doctors and medical practitioners, amongst other violations. CIPLA, in its response to CNBC TV18, shared that there is no claim or demand made on us. CIPLA, in an exchange notification on 6th Feb, had shared that the company has fully cooperated with the IT department in providing details and documents. CIPLA continues to do so on all items indicated by the IT department, end of quote. Let us see what is the final outcome of this investigation.
Okay, all right, Timsi. Thanks very much for that. As you can see, CIPLA has moved to the low point of the day, down around 0.5%. And in fact, at its fresh 52-week low of around 869 odd rupees. So do watch out for that, 867. So just about sitting at a fresh 52-week low. Remember, stock has already corrected over 25% from its 52-week high and has been on a downtrend because of multiple issues, especially post its Q3 numbers. Well, we need to take a short break, but up next, we will be talking to the management of the new listing, Divgi Torque Transfer. We have with us the MD of the company on the other side. Stay tuned. Welcome back. Well, it is definitely subdued for the markets at this point in time. We have the Nifty, which has recovered from the day's low. So currently just about 17,100 is where it's holding at. But it's not only subdued for the markets, it's been a largely subdued listing for the auto component manufacturer Divgi Torque Systems. We have with us Jitendra Divgi, who is the managing director at the company, joining in to discuss more about the company's plans now that they have listed. Mr. Jitendra, thank you very much for joining in. Well, you know, now that the company has listed, you all have made your debut on the markets. Can you give us some details in terms of the growth for the company? We do understand that you all have clocked in a revenue CAGR of around 21% between FY20 to FY22. Is this sustainable?
First of all, thank you very much. I appreciate this opportunity and this privilege of coming here and sharing some insights with your viewers. What I would say is, I think I would focus on the strengths that we bring to the marketplace. You know, we sort of live in volatile and uncertain times. And so our focus is going to be on, you know, the basics and fundamentals, keeping our processes that make us agile and fast to respond to eventualities in the marketplace. And based on this, I'm guardedly optimistic that we will be able to, you know, deliver growth value to our investors.
Okay, but is this run rate possible going forward based on what you are seeing in the business, a 20% CAGR?
Yes, what I would say is that there are two big trends that I think present considerable opportunities to not only us, but our peers in the industry in India. One is the disruption that's being caused by electrification, and it is compelling the big OEMs and the tier ones in the world to figure out how to address their businesses with a shrinking base of their legacy businesses. And that, I think, is one of the imperatives that is driving reconfiguration of supply chains. The second one, where we are seeing the outcomes of this trend, is hedging bets on sourcing, where previously there was this almost exclusive dependence on sources in China, and people are beginning to hedge their bets by bringing in India into their options. And we're seeing a little bit of that happen also. So given the way inquiries are coming in, I would say that the prospects look pretty promising.
Okay, so just on these two factors, the fact that you could probably benefit as a China plus one company, and the second being EVs. How much are you getting from both these segments separately when it comes to your order book?
What I would say is that it's not just these two trends. These are some global drivers. Besides this, of course, we are seeing robust growth within India. And what these forces are driving is also a certain pace of change of powertrain technology, which is the sector that we operate in, and our ability to effectively transfer and sort of assimilate state-of-the-art technology, which is what we've been doing for the last 25 years or more, I think positions us very uniquely to operate in the area of conventional manual transmission, state-of-the-art four-wheel drive systems.
Sure, Mr. Jitendra. We understand the opportunity on a larger scale. We'd like some numbers in terms of what the order book is currently looking like.
I think our past performance, I think, is a reliable indicator, and I think it would be a little premature and perhaps a little inappropriate for me to, sort of.
Can you share your current order book with
details.
us?
I think suffice it to say that it's pretty robust. We have been pretty gratified and surprised by the rate at which these inquiries have been coming in, not only from OEMs across the world, but also some very large tier ones. And it's across the board, I might add. That is to say, United States, Europe, and the Far East, including Japan and Korea.
Okay. Just a quick last question then.
So
one concern
I would say that plus, sorry, go ahead.
Sure. One of the concerns, sir, has been the high confidence revenues come from your top 5 customers, and 54% of your revenue is generated from one customer. Can you just tell us what the plans are to probably diversify that?
Actually, what I would say is I would suggest that you don't look at one data point from a year or 2 years. This industry, has to not only contend with sort of a volatile environment around it, but the product development process has a gestation period. And what I would say is that we have many irons in the fire, as they say, based on our strategy for geographic diversity as well as product and application diversity. So geographic diversity naturally brings customer diversity. And as we erect the revenue streams of EV and other automatic transmission products and parts, I think we will see a natural diversification of our revenue portfolio. And if you actually zoom out and look at a longer, a wider canvas of past years, you will very much see this process at work.
Okay, all right, Mr. Digby, we're going to leave it on that.
So I'm reasonably confident that, Thank you.
we've run out of time, but we'll definitely touch base with you, and hopefully you'll have more specific numbers to share at that point in time as well. But thank you very much for joining in and talking to us. So that's the management of Divgi. Stock transfers, new listings, stock down around 3% on debut day. Time for a short break. We'll get you more on the markets once we're back. Stay tuned. Welcome back. Let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. We have Khushbu Rai of moneycontrol.com who joins in now to talk about a stock that she's tracking closely.
Good morning and thank you for having me. This has been indeed an eventful year for the Shriram Group. Post-merger, the combined entity, that is Shriram Finance Limited, offers a more diversified and a larger loan book with better financial risk profile. The December quarter results, which was the first earning reported by the merged entity, was in line and healthy. The sequential results were encouraging on multiple fronts, including healthy growth in disbursement, which translated into a decent rise in asset under management. That said, the board maintained its asset under management growth outlook of 15% over the next 12 to 18 months. Also, largely stable asset quality and margin expansion coupled with lower OPEX led to improved profitability in the quarter. The management expects the coming quarter to perform better, aided by the synergy benefits, including cross-sell gains and low cost of funding. Moreover, the company's deep moat in the used vehicle financing segment provides high pricing power, and we believe the merger will likely help the company to maintain its leadership position, leveraging on these synergies and diversification opportunities. On the valuation front, the stock is trading at 1 times FY24 adjusted book. The valuation seems attractive, and we view this consolidation phase as an opportunity, and we believe the stock offers value for the long-term investors and should be accumulated.
Okay, and on that note, it's a wrap on Chartbusters. But before that, a quick programming reminder. Today, CNBC-TV18 will be hosting what will be India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and ensure we take decisive steps to bridge gender inequality. The event starts at 4:30 p.m. this evening, and we will be bringing you live coverage right here on CNBC-TV18.